Tesla stock was up over 7% today as Jerome Brady cocked back, sent the Hail Mary, and scored 6. Definitely scored 6 for Tesla. Scored 7 for Tesla. Tesla up 7% today. Here in this video, we're going to go over what you need to know about Tesla stock right now. Is now a good time to buy Tesla? Is Tesla going to rally from here? And if you can't tell from the headline of this video, you could actually be on the cusp of a short squeeze coming here very soon for Tesla. Because let me just tell you right now, the short sellers are not in a good position if Tesla stock continues to rally from here, and Tesla stock looks beautiful on the charts. I mean, I don't think Tesla stock could look better from a technical chart perspective, and we'll get deep into the technicals here in this video. So I actually want to start with something that is fairly simple and straightforward. The Fed cut rates 50 basis points. That is good functionally for Tesla. That is going to help make Tesla more profitable. As Tesla is offering these lower interest rates, Tesla will now be buying down less interest rate as of today per car that they are selling. That should help boost Tesla's bottom line. And that's a big reason why Tesla stock is up 7+% today. But the fact of the matter is the markets will do well if the economy does well. It will do very poorly if the economy does poorly. And what a lot of Wall Street is not telling you is, simply put, the Fed cutting 50 basis points is the Fed saying, oh crap, there's a problem and we want to stimulate even more demand with a 50 basis point cut versus 25 basis points. In other words, the Fed wants you to spend more money by cutting rates 50 basis points. One example of this would be like credit card interest, okay? When the Fed cuts rates, credit card rates go down, and that gives you marginally more money to spend each month. Well, if you do that collectively for the economy as a whole, that starts to make a difference. But inherently, with a 50 basis point rate cut, there's a problem. And that's not what you heard from Jerome Powell yesterday, but you need to know there is a problem. But this problem can really arise over a period of months or years, like you've seen with the last 50 basis point rate cut from the Fed. Besides the COVID panic cuts we seen in March, was September 18th, 2007. I know that hits a little close to home, considering that was the same day yesterday the Fed cut rates 50 basis points again. But you can actually rally quite a bit after a 50 basis point rate cut, because the Fed lied to markets in 2007 as well. The Fed said everything was fine. There was soft landing looked to be, coming. And basically the speech that you got in 2007, you could copy and paste that to today, and there would be barely any differences. Now, Tesla has its important event, which is the Robo taxi event on October 10th. Now, this period of, if we can call it this, a sugar high for markets was 1, 2, 3 weeks after the 50 basis point cut from the Fed, where markets collectively went up in total about 6.5%. Now, if we start from next Monday, you're going to have 1 week, 2 weeks, 3 weeks would take you through October 10th. If that were to exactly replay what happened in 2007, which I actually think that could happen. Consider this for a moment. 2007 was an election year. Okay, so what ended up happening into the election is the second half of October was, as you would expect, pretty rocky. So it's actually so similar, it's kind of stupid. We literally got a 50 basis point rate cut on September 18th, 2007. That was yesterday's date, by the way. So literally the same day, 2007 was also an election year where Obama took over in office in 2008. And the economic data at that time was very similar to what we have now. Unemployment rate of around 4.7% then. The NFIB Investor Confidence Survey was at 100.7, which is exactly where it is today. Barometers of economic strength across the board were largely similar. And we did get a 3-week period following that cut in 2007 where markets did well. And at least initially, it looks like we could be going for that same playbook. Now, if you guys did not see the last video that came out earlier today, I highly recommend you guys go back and look at it. But long story short, UBS put out a new note today. And they say that Tesla's probably going to show strength heading into the Robotaxi event itself. Then after the event, it's really going to come down to whether investors are impressed, whether Tesla meets expectations or exceeds expectations. And as I said in the last video, there is a really good chance that we sell off after the October 10th Robotaxi event, unless we get a definitive start date for the first Robotaxi rides. For an example, if we get a great event, just awesome event, everything goes well, everything we could have asked for, and Tesla stock rallies into that event like it's, starting to look like. If we don't get a timeline for the Robotaxi event, Wall Street's not going to care that much. They're going to say that was great, but we can't model that into our models or put that into a valuation model for Tesla, in other words, until we know when it's actually going to start. And that could be some of the problem that we face after October 10th. But from now until October 10th, as long as the economic data comes in good, there is a very strong chance, like 80+% chance, that Tesla stock can move higher from now until October 10th. The question is, how high? What's the best way to play this if you're not as allocated to Tesla as you would like to be? Even I have been building a position in Tesla for a while now, but I would like more Tesla. If this is really the lowest Tesla's going to go, if we really do go into a soft landing, which I don't think so, but let's just assume, then I'm not as invested in Tesla as I would like to be. I would like to own a lot more Tesla before this, 200s level is changed to a 300 or a 400 or 5 or 600, which I'm expecting at some point next year. So as far as economic data, let's briefly run through the calendar here. And I think anything that has to do broadly with the economy is going to be very important. So you have here durable goods orders, September 26th. That is next Thursday. That's the next big catalyst for markets. You are expecting, a negative 2.2%. Following last month's positive 9.9% number. So expect a negative number, but I think Wall Street's already, expecting that. The more negative, obviously, the worse. You will get initial jobless claims, and you will get another speech from Fed Jerome Powell coming next Thursday, although I think Powell made it pretty clear his stance, so that could just potentially ignite this market even more. Friday is going to be a very big day with PCE, personal income, and personal spending. Personal spending specifically will be heavily scrutinized. If spending starts to come down, if durable goods orders start to come down, things like that have to do with people spending money showing we're slowing down, that's not going to be good. Data that shows the consumer is actually starting to spend more is going to be seen as very favorable for equities. Now, again, we do have that election risk, but I think that election risk really comes into play at this point in the second half of October. So between now and October 10th, I'm not super concerned about election risk. I do want to make it very clear at this point, I don't think there's a lot of hype around the Robotaxi event at this point. I think today is the first sign of, that what could be buy the rumor, sell the news event after October 10th. This is like the first little touch of hype around the robo-taxi event that we have seen. Because we just got the Fed rate cut, there was concerns whether we would sell the news after or if Powell would be hawkish or dovish. And I don't think markets wanted to get ahead of that, even though you have this big event for Tesla coming in the next 3 weeks or so. Now, let's discuss Tesla's technicals for a moment and where the stock could go in the short term, especially if the economic data comes in good. Let's assume the economic data comes in okay, around expectations, or just better than expected. Because, again, I've told you guys this for weeks now, long before even the Fed, or, you know, maybe I said this a month ago, that I'm really not concerned about the economic data right now. Because I think the economic data is so lagged behind, I do think the economy has weakened a lot in recent months, but we're really picking up data from like early summer on the economy. And that's what we're being reflected in the economic data reports that we are seeing in September, like right now. So long story short, I actually think the economic data will help support Tesla stock. Now, taking a look at the technicals, you do have an RSI that's sitting at 62.88. You've jumped up a little bit recently, but there's a lot of room for more strength here. So I don't think Tesla's even close to being too overbought where the stock needs to come down. So let's take that off the charts because I really want to blow this up for you guys. And the MACD is positive as well. MACD is at 4.80, the signal line at 2.8. MACD line above the signal line, that is great. It looks like there is, I guess if you will, a roller coaster-like trajectory for the MACD. That's good as well. Not too much to say there, but that's positive. Okay, so let's actually look at the charts and the candles. You are above all of your major moving averages, 20-day, 50-day, 200-day, 100-day moving average. So there's not much resistance from, or there's really no resistance there from those moving averages. Now, you are also above your longer-term downtrending trend line here. I have a couple just because you can plot this a couple different ways, but you are above all of them. At this point, these lines are at the highest one is at 215. The lowest one on today's prices is at like 205. So even if you were to fall here, you'd still be looking good on a technical basis if we fell $20 or $30 right now. Okay, so that looks really good. Now, it's actually the very near term that looks exceptionally well. If we just plot this horizontal line where we've seen some resistance around 235, today you are sitting at $242 per share. You are above this level and you basically gapped above this level. It's not a technical gap, but this is a very strong green candle. Now, the gap down that you've seen here on July 24th, 2024 sent you below this level from the day before. You were at 245 down to a low of 215. So this is the big level, okay? If we can get to this gap fill at 246 over the next couple of trading days and actually break above that, I'll do another horizontal line here. If we can get to about 246 and break above that, then you start your march to 300. You are very close to that level. You can see that would be completely filling the gap. And I think there is upwards momentum on Tesla to at least get to this level. You may need the economic data next Thursday and Friday to actually send you above this 246 level. But if you get above 246, pretty fast there, heading into October 10th, you're going to be above $300 per share. I think if you break above 270, you're at least going to $300 per share. That's kind of my short-term projection. And I think 320 would be a, I guess, hype level we could reach, meaning that that's where you're starting to get stretched as far as the robo-taxi hype. About $80 higher from today's current prices. And Tesla stock is likely, in my opinion, to break the 300s as long as, again, that economic data comes in good, which is my expectation. So I think there's probably a 70% chance here that Tesla stock breaks above $300 per share before October 10th. Like, there is a very good chance of that happening. You also have a large short position in Tesla, and it looks like shorts went into a short position in Tesla at precisely the wrong time. Okay, Tesla's short interest or free float jumped on September 11th. It was 2.84% on September 11th. Today, as of September 19th, it's 3.3%. That's a big jump for a, $700+ billion market cap company. Okay. You currently have $21 billion sold short in Tesla. This equals 91.5 million shares that are currently sold short. If we just do some simple math on that, 91 million shares times 15.225, because Tesla stock's up $15 today. That is a loss of $1.4 billion for short sellers today. If you start to string together another one of those, or maybe another one of those, or another one, that becomes very, very problematic. Even since, let's say, here, when Tesla was $203 per share, you're up like $40 in the month of September alone. If we just roughly consider 91.5 million shares has been sold short this entire time, times this by 40, representing $40, Tesla stock has went higher. Short sellers potentially have lost $3.6 billion in just the month of September, and we're only 19 days in. If Tesla stock starts to accelerate to the upside, so will the short covering activity. And that could just help push Tesla stock even higher. And we haven't even got to the FOMO yet, right? The fear of missing out before the Robotaxi event. So for these reasons, I think there's a really good chance that Tesla stock can go dramatically higher from here. But with that said, I'm not sold on the soft landing narrative. I'm not sold on Jerome Powell, was honest with us yesterday. In fact, I think he lied to us. I think the economy is worse off than we think. Thus, I do think Tesla will come down at some point. So that brings us to the question. If you want to trade Tesla stock in the short term, there's a couple different things potentially you could do. And this is not financial advice. I don't know your situation. I don't know how much money you have or how much risk you're willing to take. So this is not financial advice. Simply, I'm speaking to myself, and this is what I am considering. I am considering buying more Tesla stock at these prices. After all, I'm long-term investing in Tesla. If Tesla, goes down, whatever, I have more shares, and eventually those will work very well. If Tesla goes up, great, I have more shares, we'll make more money. So that's a way of playing this, at least even in the short term. Also, options could be attractive as well at this moment in time. With a strategy that is clearly defining the loss, right? You don't want a strategy that could just infinitely lose money, right? You never want to do that. And options are very easy to define your loss. Potentially buying a call to just get, 100 shares worth of exposure or whatnot, without putting up the, $24,000 it costs to buy 10 shares, could make sense in the near term. And I think on a balance of risk reward, it does make sense for my situation. Might make sense to you, might not make sense to you. It depends on the premiums. But that could be a way to play this as well. Just because I think the odds are Tesla stock does go a lot higher between now and October 10th. As long as the economic data comes in good, which I think it for the most part will, as long as we don't start aggressively pricing in the election, which I don't think we will until the second half of October. I mean, we're kind of seeing it today. Tesla stock had a great day, and I don't really think there's going to be much to derail that. Markets really want to hold on to this soft landing narrative. And until the economic data comes in bad, until there's a reason to doubt that, I don't think the markets are going to. Now, will there be red days? Of course. I mean, we're on a pretty impressive streak if you Consider yesterday was kind of just a muted day in markets. We've been green like 9 out of the last 10 days for the S&P. Eventually there will be a red day, maybe a couple of red days, but I think collectively we're in a pretty good place for Tesla stock here. So let me know what you think about this information down below in the comment section. I would love your perspective on this. Hit the like button as well as subscribe to the channel. Are you bullish? Are you bearish on Tesla over the next coming 3 to 4 weeks or so before this Robo taxi event? Thank you for watching. Enjoy the rest of your day, and I will see you in the next one.